in the red. But now let's focus on the textile sector. The expected ruling by the Supreme Court on Trump's tariff powers did not come through. Now all eyes will be on the Supreme Court as they will deliver the verdict, hopefully, on the 14th of this month. But it's also been 4.5 months where the Indian textile industry has been facing the crushing 50% tariffs. So what's been the situation on the ground? R.K. Vij, National President at Textile Association of India, and Pallab Banerjee, MD and Group President at Pearl Global, are now joining in. Gentlemen, thank you very much for joining in. We were all hoping that the next time we speak, there would have been a resolution to the tariff issue. But as I began by saying, it's been 4.5 months. In August of 2025, Donald Trump, the president of U.S., imposed a 25 plus 25% tariffs on India. So since then, we've been reeling with that. So, Mr. Banerjee, can you give us the situation on the ground now? And then, Mr. Vij, I would like you to, throw in what you've seen in terms of have companies folded? What is the order book? How are they managing this? Mr. Banerjee, you want to go first?
Thank you. Thank you for having me on this call. Definitely 4.5 months, long time. And most of the customers do, at this point of time, don't have... they are not going to give us that support until they see that there is a light end of the tunnel. So that's what is happening for India. For order books and all, yes, we, all the Indian suppliers, we book the business with some kind of, tariff sharing with our customers. And that's still continuing, but it's not sustainable. And for Pearl, definitely we have options outside of India. So most of this business, we are under pressure to move more and more into those countries. And that's happening. So yes, from Pearl point of view, it is good. We have more than 70% of our business, which is outside of India. And in the India portion of the business of the order books has to be readjusted. It has to be more of outside of US, domestic, other markets. So that's what is going on at this point of time.
Mr. Banerjee, morning, Prashant here. Could you give us a sense of the industry? When you say 70% of your business, what you mean is 70% of the production for you happens outside the country.
Yes.
So in that sense, you are less affected. But India business, there is a reset which is underway and I guess ongoing. But for the industry now with these tariffs that we've been living with, what is the situation? I mean, is it for those who are largely producing in India and sending it out to the US? What's the situation?
So you see, 25% of a penalty tariff, that's something most of the customers said no to. So they said that if you bear this portion of the cost, then we continue with the business in India. So that's, I think, most of the manufacturers of India are taking that hit of that 25% tariff, which works out to be about 15% in terms of our first cost. That means whatever my selling price is, if I go down by 15%, the landed cost after the tariff for the customer is almost the same. So that's how it has been for this last couple of quarters. And that's something I think at this point of time, most of the players, the smaller players are definitely going to give up sooner. And that means there will be job losses and factory closures in India to a certain extent if it doesn't get solved immediately.
Mr. Vij, you want to come in? Have smaller companies given up? Have factories been shut down? What is the data on the ground?
I'm just telling Ram, ma'am. If you say this now, 50% tariff already is very high for India because once we are exporting to any country, it takes us to change and anything takes 6 to 8 months. So all the material was in pipeline, machines were set accordingly, and USA was a very big buyer for us. So this 25% higher is a very big hit for us. If you say this Tirupur market, Karur market, and NCR, Panipat market, all are suffering. And about what we have no option. So whatever the material was in pipeline, we were discounting with 15 to 20%, and somewhat the USA buyer also gave us 2, 3, 4% higher than that, but it is not for the long term. Now we have to see how to sustain further. If you see the data of September 2025 versus September data of 2024, the export from India has gone down by 6%. And from China, of course, China has gone down very much, 50%. But Bangladesh export to USA has increased by 10%. And from Vietnam also, it has increased by 2.5%. So, of course, this America is getting the material from there. And now it will be a difficult time how to go further. Of course, with the government support of FTA and other things,
Right.
we are started looking after the other market, but it will take time. 7 to 8 months is very tight for us, even for the big player. MSMEs are really hit very bad, even with the big player of Gokulnath Das, Wellspan, this Aryan, and these are all people are suffering because cotton was the major garment we were going to it was going to the America. About out of $12 billion in a year, about $10 billion was going to USA. So cotton is very much hit. Now, one thing is very clear that government, of course, is supporting us in terms of and the credit facilities, but this one, we should have a raw material. Cotton, government has given us 11% custom duty rebate up to till December, but it has not so far extended. So one thing we need export from the government, that man-made fiber, raw material, cotton raw material, viscose raw material should be at international prices so that we can shift over to the other country. And it is not easy to shift over other country because China, which were exporting to USA, has also dropped down, and they are also pushing to the other countries. So this is the time is there, but it will take 8 to 9 months to adjust these things. Of course, PLI scheme is there. Our Indian domestic market is very good, but it will take. It is a very tough time, next 6 to 8 months, and so that we can find out other markets.
Okay, all right. Got that, sir. Pallab, coming back to you, as you were mentioning that you're trying to de-risk yourself, and that's why a lot of production can happen outside India as well at the other facilities. We'll just pull up a chart. The facilities that you have all across the globe should come out, and Bangladesh is particularly a large part of it. You're de-risking yourself with regard to exports to the United States. But what about the tensions on the border? India-Bangladesh tensions, well, they have perked up a little bit in the last few weeks. Is that a bit of a risk to your business?
Not really, because you see, Bangladesh is very much dependent on this garment manufacturing and exports. So what we are seeing, Nigel, is that definitely the industry is doing fine. There is definitely a political turmoil at this point of time. And there are some benefits also, like, India, the domestic market is buying less and less from Bangladesh. So that might be giving some kind of opportunity for the Indian manufacturers to do more of domestic business. But yes, in general, we are not seeing any change. Also, if you look at it, the Western markets, they are doing pretty well at this point of time economically. We thought that there would be, due to tariff, there would be some kind of slowdown or lack of demand, but we have not seen that. Whether it's US market, the European market, or like even Japan and Australia, I think the markets are doing well at this point of time. So yes, it's a little bit frustrating for being in India at this point of time due to this tariff. We are not able to capture this opportunity. But if I look at as just now Mr. Vij also mentioned, the Bangladesh, Vietnams, and other countries, they're experiencing a good growth at this point of time.
Mr. Banerjee, in August, what was the company's exports to the US? And now what does it stand at? Trying to assess if you have managed to diversify your output to other nations, because that process also takes time. So it's underway, the efforts are underway. But to what extent have you managed to do it? So if you could share some numbers to illustrate that.
So yeah, for example, if you look at Pearl Global, we have almost 70% of our manufacturing was happening from Bangladesh, Vietnam, Indonesia, and Guatemala. And India was constituting about 30%. And in that 30%, we had almost about 50% was a US market and the 50% was the rest of the market. So the trend that we are seeing now is that US market is going slower. That means it's diminishing for India manufacturing. And that part of the business, if I look at US specifically, I'm experiencing a significant growth both in Bangladesh and Vietnam and Indonesia. Of course, Guatemala is favorable for US always. So that these are the places where we're seeing a significant growth that's happening, not only for US, but if you see that the Western markets like UK, Europe also have done some kind of FTAs which are already active in Vietnam now. Bangladesh always had it. So that way, like we are seeing growth in these markets in terms of my order books, a significant growth. If I talk about India, yes, that 50% of the US component is slowing down a bit. I have to quickly replace it by other markets. So that's the transition that we are going through. So maybe like this particular year, I might drop down the India share a little bit just to compensate this, because other important part is US was the most, I would say, attractive market. The order sizes were good, customers were reasonably good, and good pays. I would say the price points were better. As just now, Mr. Vijay also mentioned that there are a lot of dumping happening from China to other markets, whereas US and the Western markets were more clear of, to reduce or de-risk from China. So that's helping in terms of the other markets, whereas for India, we have to compete in all these other markets. United Kingdom, we had a FTA which has been signed, but it's not yet actionable as of yet. European Union, we are expecting, but yes, a lot of geopolitics at this point of time, and we don't know which way it will go.
Okay, all right, gentlemen. We look to reconnect with you all and get an update. Hopefully, things flow in our favor. In fact, companies do battle past this a bit of a difficult phase and then conquer in the time to come. Thanks a lot for joining in and giving us your perspective.